Nigeria's tax reform is being described as one of the most ambitious in decades, promising fairness, efficiency, and growth. But critics warn that timing, trust, and enforcement style could make or break it, especially in an economy already bruised by inflation, subsidy removal, and foreign exchange reforms. I'm talking now to Dr. Muda Yusuf, Chief Executive Officer of the Center for the Promotion of Private Enterprise and author of a detailed intervention on this reform. Dr. Yusuf, Happy New Year. Thank you for joining us on the program. You have described this tax reform as conceptually sound, but implementation sensitive. In simple terms, break it down for us. Where does the real danger lie?
Well, thank you very much, Nifemi, and Happy New Year to you and to all our viewers. The tax reform, has a lot of positives, which have been amplified on various fora, in terms of the value to bring on harmonization, abrogation of obsolete laws, exemptions of some SMEs and individuals, in terms of exemption threshold. So many things positive are in the tax laws. But, there is no legislation that is perfect. And we have to bear that in mind so that as we progress with the implementation, because what we have now is a law, and there's very little we can do to change the law as it is. So it is what it is. Even the controversy around gazetting or no gazetting discrepancies, that has been laid to rest, as far as I can see. So we need to worry now about implementation and about the strategy to adopt in implementation. The strategy is important because the citizens and businesses actually have not fully recovered from the outcomes of the recent reforms. I'm talking about the reforms that took place in the last 2 years. So that is why many people, particularly the ordinary citizens, are very skeptical about anything that has to do with reforms, that has to do with the taxes. Notwithstanding all the efforts that have been put in place to communicate that this reform will actually benefit the ordinary people. But that skepticism is still there. So that is why we need to be very, very strategic in dealing with the issues of implementation. The first thing I think we need to worry about is the implication for the informal sector of the economy. This is where the majority of our SMEs are. Data shows that we have close to 40 million MSMEs, many of them micro enterprises. Many of them are not quite literate. Most of them don't know how to keep records. Most of them cannot relate with all the terminologies and complexities of taxation. Most of them don't understand what you are talking when you talk about filing of returns. They don't understand what you mean by VAT, company income tax, input tax, personal income. They don't understand all of that because the culture in the informal sector does not reckon with all of these things. Theirs is to buy their products, do the business, and move on with their lives. So when we are now coming with this legislation, it is good, but it seems to me like a legislation that has not properly reckoned with the peculiarities of our own situation.
Indeed. And I see that your document, Dr. Yusuf, is asking the very obvious question whether it's realistic or even fair to impose mandatory filing, penalties, and presumptive taxes on this segment right now. But I'd like us to take a brief look at the specifics. The mandatory reporting of 25 million naira quarterly bank transactions, the proposed 30% capital gains tax, and there's the 500,000 rent relief cap that many people are talking about. Which of these, in your opinion, poses the biggest risk to confidence and why?
No, all of them put together. It depends on where you stand. Now, the way it is, even for those who are exempted, everybody is supposed to file returns, even the Okada rider. And you know how people react when you begin to ask them, interrogate them, extract information from them on what is their income, what is their expenditure, and this information are being requested by the tax authorities. Even where there is no harm being meant, even where there is no imminent implication for taxation, the fact that you have made it mandatory for everybody, including these 40 million micro and small businesses, to file returns, that has a lot of implications, and it can create a lot of apprehension. I know what it is when you ask information from people. When I was in the Lagos Chamber of Commerce, common questionnaire for people to fill in and tell you their turnover and sales, people are very reluctant. Not to talk of now going to maybe Oshodi market or Sabongeri market in Kano or Newi market. And there's a penalty if you don't file the returns. That is a source of worry. The second point is about record keeping. There's a penalty in the tax laws that if you don't keep record in a way that will be amenable for the tax authority to be able to assess your transactions, there's a penalty for it. How do you expect the man who is selling in Mile 12 or the woman who is selling in Balogun market or somebody who is in one market in Abuja to be showing you record of transactions, statement of accounts, their income, their expenditure, their profits? And if you don't keep that record, this law is saying that there's a penalty for it. These are sources of apprehension and anxiety. Even if there is no immediate prospect of you imposing any tax on them. Then there is, of course, the issue about the filing, the information from the banks to the tax authorities. That is not exactly in the law, but it's a regulation or something, where the banks have been given instruction that any transaction, the value of transaction within a quarter, in and out, once it exceeds, once it's up to 25 million and above, it has to be reported to the tax authorities. Now, the tax authorities have explained that the essence is not for you to tax anybody. But how else do you want people to interpret that? When you say that any transaction, where any bank account where the volume of transaction is 25 million and above has to be reported. And many of these SMEs are saying that the transactions that go through their account, the money doesn't belong to them most of the time. For instance, if you're a contractor, your client has given you money to go and buy cement, to go and buy gravel, to pay the carpenters and all of that. The money passed through your account. And that is seen as, okay, maybe during the quarter, the amount, the transactions has hit a turnover of about 25 million. That has to be reported.
I hear you, Dr. Yusuf.
You have to come and explain. That is also an anxiety, it's a source of anxiety and concern.
Indeed. CPPE is recommending focusing on revenue efficiency. And the point you're making is that a small percentage of taxpayers generate most revenues. But why do you think this approach is more sustainable than blanket enforcement that you say Nigerians are anxious about?
No. The point is that this is a major culture shock. It is good to pay tax, yes. But it's a major culture shock. Especially coming from the fact that we are still recovering from the reforms. People have not fully recovered. Those reforms are necessary, I agree. I'm one of those who support the reforms. But the reality is that Many small businesses and the citizens are yet to recover from these reforms.
Dr. Yusuf, we have just about 2 more minutes. Precisely what are you recommending now that government does, especially considering that this is a pre-election year?
What I'm recommending is that we should have focus on revenue efficiency. We should focus on the small percentage that can give the largest revenue. That is what we call the Pareto principle. We should give more time for those in the informal sector, for them to be able to digest all of these things. So I think for the first 1 year, let us focus on the formal sector of the economy. Let us leave all these small people, because even the revenue we get from them is so immaterial. So that is why I was talking about phased implementation. The first leg of this implementation should focus on the 20% that can give you the 90% of revenue, whether at individual level or at business level. And there is data to support that, even currently, not only in Nigeria, even in other countries. In South Africa, about just 3% of the companies give about 87% of the revenue. That is where the focus should be for now. And this is a pre-election year. There are political consequences. When you begin to go after everybody to say, come and file your returns, come and show us your books of account and all of that, this is our political consequences, which the government should also be sensitive to. So that will be my position.
All right. A good place to leave it, Dr. Yusuf. You know, it's a developing story. We probably get your thoughts subsequently. Chief Executive Officer of the Center for the Promotion of Private Enterprise, Dr. Muda Yusuf. Thank you so much for talking to us.
Thank you very much.